Big news for Tesla. Elon just bought 1 billion shares. Opendoor is having a short squeeze going on right now, but there's some people saying that the huge move in Opendoor is about to be absolutely monkey hammered. And then Nvidia just landed a $6 billion contract, all that, and our trading plan for the day on this video right here. So let's start with the commodities and the markets right now. All right, Joe. So taking a look at the board here, we can see the Dow Jones is up just a smidge. S&P pushing new all-time highs, up 39 basis points today. And the Nasdaq, the tech stocks are big winners on the day, up 68 basis points. I think people are getting excited about a rate cut coming on Wednesday, right? I think the prediction market right now has like a 96% chance that it's going to be 25 basis points, and a 4% chance it'll be 50 basis points, but there's a 0% chance it'll remain the same. That's what we're seeing right now. So the markets, I mean, they're liking the idea of it, but it's could very much be a buy the rumor, sell the news type of situation. I mean, we've seen that many times before. People get it's like leading up into earnings, one of my all-time favorite trades, right? People buying the stock as it runs up into earnings, they hit earnings, and then it gets absolutely monkey hammered off of that. All right, let's move into commodities. So gold up again. By the way, the last time I looked at gold, it was 2,600. When I saw today, it's 3,700. I couldn't believe my eyes. That's crazy. Silver's up. Yeah, I know. Bonkers. Silver's up 64 basis points at $43. Last time I saw that, it was like 18. I have completely been out of the loop on precious metals, and they are just like going crazy. Oil also up on the day. We've got West Texas up almost 1%, and natural gas is up as well. So basically everything's up across the board. You've got metals up, you've got oil up, you've got the indices up. Everywhere you look, everything is going up, right? I love gold. Yes, everything is going up for sure. Okay, so what I want to look at next are those three stocks that we talked about, right? And I'm getting this from the top stocks over on Reddit. What are the big stocks that are moving today? First on the list is Tesla. So I checked out the news for the day on Tesla. Tesla's bigger picture upside story is still intact. And Elon just bought $1 billion worth of shares. $1 billion of shares.
Incredible.
I'm a little surprised because, like, you don't normally see CEOs buying shares, right? They're usually liquidating their holdings. So I think that's got a lot of people really excited about Tesla. Let's go look at the stock right here. I mean, it's up, man, it's up bigly the last few days. It's gone from up 25% in 7 days. What do we have for that buy signal over here? Let's see when the buy signal came through. Back on August 12th. So from August 12th to now, where's that? There. That was a decent signal if you ask me. That was 23.44% so far. But you can see, I see some issues right here. What do you see, Joe?
I see those big blue rectangle bars there, and we're going into those hitting red candles, which is what we'd expect when we go into those big bars. That's where our resistance is.
Yep. How many days old is this? 100 or 243 calendar days. That is one that I would absolutely be aware of. That this is an area that's going to prove a ton of resistance, and you can see exactly that. Launched right up into it, and now it's getting pulled back. So let's take a look at this, right? Elon Musk purchased 2.5 million shares of Tesla last week, which, I mean, clearly good timing to buy. He got the outlier buy signal and he bought it, worth approximately $1 billion. And seeing as Musk is more focused on Tesla and its move into AI. Well, you know, Elon being the Renaissance man that he is, right? He had his hand in the government. He had his hand in Tesla. He had his hand in SpaceX. He had his hand in the Boring Company, all kinds of stuff, right? I don't know about you, man, but like if I'm a shareholder of any company, I want the CEO to focus, right? I know clearly he's got ADHD off the charts, but I think focusing is going to help him and the company overall. What do you think?
Yeah, typically that's what you see CEOs do. I mean, you don't see the other guys branching out like this, and or at least it's not in the news, right?
Yeah, exactly. It's I mean, it looks great right now. And I think a lot of that is because investor confidence is being restored because Elon focusing in. Hey, there was a quick video that I want to watch. It's only 3 minutes long. Tesla's bigger picture upside story is still intact. You want to watch this with me?
Sure, let's do it.
ending. Let's bring in Paul Sienna, head of technical research at BofA Securities. Paul, so the technical suggests to you that this stock still has room to run from here.
Absolutely, they do. Over the last couple of years, Tesla's share price.
Paul needs a new mic. Sorry, bro. You need a new mic, especially if you're going to be on the biggest financial network there is.
Was forming a very nice triangle pattern, which resolved to the upside late last year. And since that peak in late 24, it came back down, retraced part of that, and found a lot of support and formed a smaller bottom pattern that says, you know, the bigger picture upside story is still intact.
And how much higher is that upside based on what you see? $700, and if so, when?
Yeah. So our bigger picture target from that, you know, long triangle pattern over the last few years does measure to about 700. And given the size of that consolidation,
bro, I can't stand people giving price targets, right? Especially like looking at this, the $700 from here. Let me remove drawings real quick. $700 from the price it's at right now is how much? Hang on. This is going to be huge. From the exact price it is right now up, it's only 72%, Joe. It's only 72%.
That's it. Should be there by Friday, right?
I know, right? I mean, easy. It does have a little bit of overhead resistance in the way, though. I mean, 2 giant order blocks, but once it clears these, there's the moon is in eyesight right there. The $700 is definitely in the realm of possibilities when you go from 463 up to 700. However, I mean, new all-time highs. That's bullish AF. So what do we know, right? We don't work at Bank of America and don't have shitty mics, but let's continue on.
Consolidation taking roughly almost 3 years. We tend to use Fibonacci ratios to project forward when that could occur, and a few different measures say as early as July 2026. Some linger into the first quarter of 27.
I mean, Paul, I'm sure that this particular pattern was not the same setup as past times when Tesla has had one of these runs. But if I look at a 5-year chart of the stock, there have been a handful of times when it really accelerated to the upside and put in a pretty serious peak. It hasn't spent much time above $400, really only a couple of months since first getting there a few years ago. So what would you look for to suggest it's getting overheated? It seems like the trend this time is just now turning as opposed to peaking.
Well, something that we talked about for a while, Joe, is this order block, this area of support that it had. I mean, I don't know how many times, every time I pulled up Tesla and I said, look at how much support it has right here, right? Finally, trampoline jumped right off of it and then smashed face first into a brick wall right here. It's going to need a lot of work to get over this area.
Yes, I would agree with that statement wholeheartedly. And I think the first thing we can look for is new all-time highs. Right? We're really not in a secular bull market, let's say, for Tesla's share price until it's well past $488 a share, which was the prior peak. So, you know, with the move that's happening this week and over the past couple of weeks, you know, in forming smaller bottom patterns that complement those longer term charts you've mentioned, Mike, I think the shoe fits that, yes, that $700 target is still well in play.
And in terms of the broader market, Paul, how are we set up going into the Fed meeting, going into the second half of September here? Obviously, clicking to new highs. Market's not really kind of doing anything wrong if I just eyeball it. But what can we expect in terms of how it might trade in relation to the coming period?
Sure. So we've had upside targets on the S&P this summer of about 6,500 to 6,625. So I see the equity markets in a mature place, having reached these kinds of targets. So one of the things we advocate for is if you are long and have been long, to think about maybe hedging some of those longs in the options market. If you're in the position where you think the S&P is going to 7,000 and maybe that's approximately where it peaks out, well, then you have yourself a very convenient strike price to think about playing with. I'm a little concerned going into the Fed for a couple of reasons, Mike. One, because the last 10 days of September are notoriously and seasonally bearish. They're the worst 10 days in the market for the year. And actually, September 17th is the 10th day before month end. So it's perhaps just a coincidence, but we'll find out if some of the bearish seasonals come back after all. I'm also a little concerned about some of the breadth measures that we track, like.
Oh, for sure. Breadth is real, Joe, right? We're going to talk more about breadth later when we talk about our trading plan. But breadth has been falling hard and fast, right? We have seen more and more sell signals coming through. And I understand where people get confused to see the market pushing all-time highs. And it's like, well, breadth must be great, Joe. Everything must be amazing. Under the surface, under the hood, right? It's like driving a Ferrari with a Hyundai engine, right? it's not going to perform if you take it to a stoplight drag race. It's just not going to be there. So what I'm seeing, what I like to use as a example is, imagine that the S&P 500 is a general. The general's marching north. Everybody looks at the general marching north and they're like, I don't know, Jen, this doesn't look all that great, boss. I think we're going to turn south. So the general's marching alone up ahead, and at some point he's going to turn around and be like, oh, I got no reinforcements behind me. I got to turn south as well. That gives me a lot of pause. That gives me some concern for sure. And it's interesting that he's also mentioning breadth. A little bit surprised that he mentioned it, Joe.
I was too. Yeah, it's good credit. It's kind of handy he picked that out because we're about to talk about it.
Yeah, for sure.
The advanced decline line on the NYSE stocks is not broken out to a new high, even though the S&P has. The percentage of stocks in the S&P 500 trading above the 50-day moving average is still consolidating into a narrowing.
He just said the MMFI. He said the percent of stocks trading above their own 50-day moving average. That is what I like to use as breadth as well, which is the MMFI. Before we even had the indicator inside of OVTLYR, this is what I used. And yeah, for sure, it is consolidating. Absolutely. It's not pushing higher. What that means, Joe, is that we're not seeing more and more stocks pushing up into new bullish trends within their own charts. We're actually seeing sideways and potentially starting to move down at 61.54, still above 50%, but it's not going anywhere.
Range, which means it's diverged from new highs. So there are a lot of those kinds of divergences still present as we get to a mature technical target area. Kind of think about hedging some of those longs and being responsible with that side of the portfolio.
Dude, I couldn't, like, hedging is one of the most like dirty words to me. Ugh. It's like, hey, you know that great money that you have in your account? Why don't you go burn like 20% of it just as a hedge, right? I don't know about that.
When he said we should protect that side of the portfolio, I just heard go in cash and not mess up.
Hey, that's a great idea. I love that idea, Joe. Hey, have you also heard of Opendoor? Opendoor has a big short squeeze going on, apparently. I didn't know that. Opendoor stock is in a major short squeeze, and it's now added over $5.8 billion in value. The stock may continue to rise in the coming days as the Fed slashes rates, and then it will plunge, according to this person, as other meme stock companies have done in the past. That reminded me of what I like to call the 50-80 rule. I learned this from Mark Minervini, and it's 50% of the time, a stock like Opendoor, so let's go look at it. Open 50. Oh, goodness gravy. 50% of the time, a stock like this will fall by 80%. And 80% of the time, it'll fall by 50% at least. This is not a stock that I would long-term be excited to hold. And but like it's the number 2 stock on Reddit right now. The number 2 stock on Reddit. And I get it. I get where they're coming from, but I also remember GameStop. I also remember AMC, which I was on TV, like Dean Cain was just a couple of minutes ago, talking about. If anybody got that in the chat, that was for you. Like Dean Cain was a couple of minutes ago, and I was saying, man, I'm having so much fun with this, but I also understand where I'm going to get out. I think a lot of people are going to be looking at Opendoor, and they're going to be like terrified to sell their shares because they're going to be like, well, it should go back up. It should go back up, right? That's the most dangerous word in finance, Joe.
Mm-hmm. And when your ATR is getting as large as these are with these daily moves, I mean, you could go through the point that you decided you were going to stop out, long before it actually stops. There's a lot of risk there.
And notice, Joe, tell me order blocks don't work. Go ahead. I'll get you to try to tell me. You can't tell me that that's coincidence. You really, really, really think that this order block all the way back from 2022, that's 1,303 days old at this point, has nothing to do with the fact that it absolutely topped out to the candle on that spot. You really think so? I don't know about that.
Oh, I follow those bars religiously. They absolutely work.
Yeah, crazy, right? So I don't know if Opendoor is having this short squeeze. Apparently, this person thinks that it's he's getting more and more bearish by the moment. But let's go look at it in OVTLYR. I mean, it does have that buy signal, came through on September 9th. Where's September 9th at? Right. All right, yeah. And since then, I mean, it's been gorgeous, right? That's what you want to look for. You want to find a stock that's kissing its 10 EMA and then just running away with it. And it did, right? It's up, oh man, just from a couple days ago to now, 52%. 52% is not shabby at all. But I don't think most people know where they're going to get out. I think they're going to be crying as it comes back down, when it comes back down. Maybe 50%, maybe 80%. We'll have to see from there. Last story of the day, Joe, has to do with Nvidia. Nvidia just got a new $6.3 billion contract with CoreWeave. What's a CoreWeave? Do you know what a CoreWeave is?
Nope.
Not either. Do you use it in like underwater basket weaving? That's as much CoreWeave as I understand. The deal offers some reassurance to CoreWeave investors in light of the company's heavy customer concentration and rampant competition for cloud offerings. Okay. CoreWeave and Nvidia are deepening their ties with the new cloud service agreement valued at $6 billion. Which CRWV, that's CoreWeave. Okay. Said it entered a new order from the AI chip maker earlier this month. They'll give Nvidia access to computing capacity that it can't sell. Okay. Under the existing agreement, CoreWeave's data center capacity is not fully utilized by its own customers. Nvidia is obligated to purchase the residual unsold capacity. Okay. So I don't know what CoreWeave does, but it has all these data centers that aren't being fully utilized. So they sold them off to Nvidia for $6 billion. Okay, cool. Let's go look at those two, CoreWeave and Nvidia. So I got Nvidia pulled up here. Actually, let me go on the chart real quick because I just noticed that we've got an order block inside of OVTLYR that's not quite showing up on the trading view chart just yet, right there. So if you are trading Nvidia, just be really careful. There is an order block out there that hasn't propagated here on trading view just yet. But Nvidia had been fighting some downward moving averages, moving up at this point. Now let's go look at CoreWeave. What was it called? CoreWeave, CRWV. And Nvidia is still sitting on a sell signal. Maybe I typed that in wrong. CRWV. Yeah, we don't cover CrowdWave, CoreWeave, whatever it's called. And that's okay. We cover 2,600 of the most liquid stocks, and we are adding more all the time. In fact, I know in the next couple of weeks, we're adding at least 300 into the platform. CoreWeave could be one of them. I honestly don't know. But in the very near future, we're going to have all Nasdaq stocks and all New York Stock Exchange stocks listed in OVTLYR. So it's going to be awesome. That's coming really, really soon. Oh, it's an IPO from this year. Yeah, we need at least 5 years of data. So that's why. All right, cool. So what do you think of Nvidia and CoreWeave, right? Does this make sense to you, Joe?
I mean, I find it interesting to review the news, but the fact that I can just go into OVTLYR in about 4 seconds, know if it's something I should be considering isn't a trend, it just saves me so much time. And, time is money, right? So if I can skip past things that are hitting order blocks like we just saw, I can just move on and focus on something else that isn't. And when that one goes through its order block and turns green, I'd probably consider some support instead of resistance. And I would think maybe my money's a little bit safer to go into a stock like that. So
that makes sense.
In my world, it's about saving your time,
Dude, and this one is not Nvidia. I know at one point people thought Nvidia couldn't go down. It kind of proved people wrong, though. Let's go. I've got it pulled up right here. It pulled people. What am I trying to say? It proved people wrong. There we go. As it came down, started to even look like a bearish trend. However, it has recovered. It might be in a bullish trend as of tomorrow. But man, it's been going sideways since July at this point, and we're in September. So it's really not done anything for months. And OVTLYR got that sell signal way back in August 5th. So really nothing to do. It's only got 4 of 9 lit up. Not a beautiful stock for me, not at all. But Joe, let's take a detour and let's start talking about our trading plan for the day. Now, I've got everything that we want to see right here in the OVTLYR 9, as well as a few other areas I'd want to look at. I did go ahead and highlight the other areas to look at in a slightly different color because I don't want to detract from it. But the OVTLYR 9 starts with the SPY having the bullish trend. So let's go look at the S&P 500. And it is on a buy signal. We already saw that. And it is in a bullish trend. We just talked about how it's pushing new all-time highs and new all-time highs with a buy signal. The SPY is in a great place to be. So you got the trend and you've got the signal. And we mentioned this earlier, but market breadth is not looking great. It's getting more and more sell signals moving down further and further. So for me, that's going to already disqualify me from taking any stocks out there. There's no possible way that I would put my money at risk. So I'm going to continue to sit in cash and not F up my portfolio. But in the meantime, let's go look at a few of the sectors. Are there any sectors that look great? Nope. Joe, one sector is bullish, and it's utilities. Why is that a bad thing?
Well, it means there's an awful lot more selling going on than there is buying, and the way I'm trading is trend up. So I'm looking for buyers to be helping me out and raising the price.
And utilities is one of those counter-cyclical sectors, right? This is not what you want to see when utilities are starting to move up and staples are starting to move up. That is your sign. That is your advanced warning to know that there is a run to safety, as Ozzie Ian has put it, a graduate of OVTLYR University, just like our friend Joe here. So looking at this, man, there's no way that I'd be trading it, right? And with the news going on out there, a couple interesting news stories, but nothing that gets me excited to put my money at risk. What about you, Joe?
No, but interestingly, Friday when I saw that market breadth looked like it was going to cross, I was thinking, I could be smart and I could jump the gun. Look what happened. We get to Monday. It turns out it didn't cross. It continued to go down. Yeah. So a little, trader's lesson there. Just because you think it's going to cross doesn't mean it's going to.
That's true. That's right here where it looked like it flattened out, might be turning back up. And in fact, that's what we mentioned in the Sunday video, is that if the market breadth can turn around, we might see a lot more movement to the upside. But right now, I mean, the market, it is up on the day, but it's really not got all the momentum that it looks like it has going behind it, right? And so, you know what? If you are trading long anything right now, just be extra careful. Know where your stops are going to be at, and don't act, react. I like that, Johnny. Very good. Joe, listen, if somebody wanted to save time, make money, and start winning with less risk, what do you think they should do?
Well, they could click one of these videos right here.
Well, those two?
Yeah.
Dude, that's a brilliant idea. You guys click one of those and have a fantastic day. We'll talk soon.